Hello from Chicago. Alan Knuckman high above the trading floor here at the CME Group, talking energy with a focus on crude oil. A $58 close, up 50 cents. That's a 1% push today. That's significant. We haven't been to this level in more than a week, and we close at that 58. We did see a tight range once again. So this is now Tuesday and Wednesday where we only had a 60-cent high to low, which is about half of the normal action. So we're seeing participation slow. That could mean some price movement, some volatility. We'll have to wait and see. But the last couple days we've been in a condensed range. So this is the week highs, which is important, significantly off of those recent lows where we've had this market come back after the bit of a sell-off last week. We saw some profit taking last week. We got up to 58.60, a little disappointment, unable to attack that 59 double top, and we've been kind of drifting. Now today's action is a higher high and a higher low than we saw yesterday, so that could be viewed as a positive, and this consolidation waiting for some more news or something, a catalyst to break out of the action after unchanged on the week last week. So fundamentally, we did have some draw data come out today, back-to-back crude inventory declines. So we had the EIA this morning had a fall of 6.5 million barrels last week. That's on top of the other information that came out where we saw the API saw a draw of 5.2 million barrels last week. Now, both those were significantly more than the estimate. The estimate for today was 4.5 million barrels. So that's what we were expecting. The market came out with a larger drawdown on that supply, and the market had a modest positive reaction. But now what's important here is this is 5 consecutive weeks of this inventory drawdown, and that's reduced the overall stockpile to 436 million barrels, which is an important to note here that we've come off those obviously early summer highs. Also, we're getting some bullish banter in the marketplace. A couple of things. CFTC numbers came out with that data showed that last week that the most bullish bets were on the books there in 9 months, so that could be interpreted as people are positive. And also, you're seeing Brent holding at its highs, and that's a positive for WTI that we trade here at the CME Group because that's lifted exports. Exports have surged because it's the WTI oil's at a discount to the higher priced Brent that's dealing with its own disruption situation. Also, you're seeing the global shrinking of stockpiles to continue through the second quarter, according to Goldman Sachs. Now, that's a pretty big call, and that's going to shrink supply some more. We saw the Kuwait oil minister today come out today and say that the production cut compliance is now was 122% in November, so that's the largest number since January production cuts started. So all that can be interpreted as bullish, but the price action not so much just yet. Focus on where we are. We're at 58 with 59 double top from the end of November and beginning of December up above. If it can push through that 59 level, we had about a $2 pullback to that 57 midpoint. So that targets 61 on the upside, then 65 in the big picture, because crude had traded between 45 and 55 for most of the year before this breakout. So that targets 65 on the upside. So to summarize, crude today up 50 cents, closing at 58 for the first time in a week.